Simon, it's great to have you back. Part of the consensus discussion today is that ad revenue, password revenue, better late than never, I guess, and some believe it really could move the needle.
I absolutely think it will. I think that you not only need to look at the revenue that YouTube is generating from their ad business, 28 billion in annual revenue there versus 24 billion in annual revenue on Netflix. So there's all of that additional ad revenue that can deliver, plus the broadened addressable market opportunity in terms of people that for whom Netflix might be just a little bit too expensive on a monthly basis. There's going to be a pricing tier that's perhaps half of what it currently is. So I think that really does broaden that addressable market.
Do you think not expanding content spend means that churn is a higher risk or not? They did mention that churn is back to pre-price hike levels.
No, I don't think. I mean, as you're well aware, and a number of guests have already referenced, they did mention the 17 billion annual content spend is at the upper limit and will remain stable for the next couple of years. There's more than enough money there to go out and buy best of breed shows, and commission amazing films and TV shows all around the globe. So I don't think that that's going to be in any way a driver of churn. In fact, and again, they've referenced this on the conference call yesterday, there is tremendous engagement with the current lineup of content.
We mentioned the Journal piece suggesting that there are some brands that are very interested in getting onto Netflix. Do you think Microsoft was chosen because they're the best ad partner or because there are some secondary motives at play?
I absolutely think there are some secondary motives. But first and foremost, they're not a competitor. The tech is complementary. They referenced that on the call yesterday. And I think there is the one word that I thought resonated on the call yesterday was collaborative. I think there's an opportunity for both businesses to develop. And I think they're both going to be well positioned off the back of this to expand into complementary areas.
Simon, you mentioned, them obviously creating compelling content. They would seem to need to do it almost on a monthly basis to prevent serious churn. Do you think they can? And how do you judge what they've been able to do over the last couple of years? Obviously, they've had some huge hits, but they've also had plenty of movies that really don't move the needle.
Absolutely, but I think we look at Netflix under a harsher light than we do the other streaming services because it was first, because it's the largest. I think there's a tendency to be critical of the content, but in fact, they are delivering amazing content every single month. Many people will be aware that The Grey Man is launching later this week. You'd be hard-pressed to say what other content is launching on the competitive services in the coming week or months. And so I think Netflix is very good about not only having a very robust calendar, but also communicating to the audience, this is what's coming up, this is something to look forward to. So no, I think they are actually well positioned. And as I say, I think we look at them perhaps too critically in comparison with some of the other services who maybe aren't as well positioned. And the other thing, what was referenced on the earnings call yesterday, that there's a Nielsen report coming out that references that Netflix has 7.7% screen share time, which is the highest level they've ever seen in terms of what people are viewing each week. So clearly the content is resonating because more and more people are choosing Netflix as that first destination for their entertainment content.